Hey everybody, and welcome back to my portfolio. This is my portfolio with M1 Finance. I created this one back in just about the end of 2019, but we really didn't really start ramping this portfolio up until, for the most part, until about 20, like about say about June. We really started adding a bit of money to this portfolio back in 2020. And of course, the purpose of this portfolio, this is a dividend portfolio. The vast majority of the companies that I hold are paying a dividend, usually typically of at least between 2 and perhaps closer to like 8%. So I have quite a few stocks that typically pay over 5% in terms of dividends, and I have some that will pay 6, 7, and even some upwards of 8% in dividends. I have some monthly dividends, and of course I have some that pay quarterly, and some that pay semi-annually. Looking at the portfolio, you can see this is basically my all. You can see we're currently up. We finally breached the 20K mark with 1,680 of that coming from dividends. The goal of this portfolio for the end of the year, right? We're only almost halfway through the 4th month of the year. The goal for this portfolio, of course, is to get it to close to 100K invested with roughly 500 a month in passive income. And of course, there's other upper ways, of course, where you can make money, Dogecoin to the moon. But for me, what really matters most is income, of course, as my goal is to move abroad and eventually start working towards buying some real estate this year abroad before things kind of maybe take a turn for the worse here in the West. Now, with that said, for the week that we just passed through, we were up 1,463. We got 1659 in dividends, and we made 2 purchases for last week. And see, we got some payouts over here. And so we had a couple of buying opportunities. I did make some sells, but I put in about an additional 1,000. Some of that went into Kraft Heinz, which of course I believe that different sort of food stocks and condiments will make a move to the upside. There is of course a shortage on ketchup, which is why I kind of liked Heinz. Also, it was a very much beaten down stock that really hasn't had much of a recovery. It's a bit slow, it's a bit steady, paying just shy of under 4%. And as you can see, we're kind of stepping for quite some time. The company was holding below $36, and then we finally saw a breach, a retest, etc. And so we're kind of slowly moving towards the upside, and it is a stock that I will more than likely hold. Been around for quite some time, at least the company, and it pays a little bit of a dividend, paying, where are we? Pays quarterly, 40 cents every quarter, currently sitting at 3.9% yield. Now that's one of the positions that I've talked about. The other food stocks that I'm in are companies, for example, like Kroger. I bought Kroger down here on this big pullback, which is where I initiated my original purchase. And we're seeing Kroger as well move to the upside, more or less holding what looks like about $34, paying just shy of 2%. I'm really holding it for Kroger had posted that they were going to be doing a bit better in terms of online sales, and I basically took them at their word. Watched a little video from the CEO, and this is basically where I think America is going to have some issues with lockdowns, especially in certain democratic states. And of course, moving forward, I basically poised Kroger as another company that I think will do well in terms of the retail food space. The other company that I went with is also Tyson. We're also seeing a breach finally to the upside. We saw multiple days where we bounced off of 74s, and now we're seeing a breach to 78. We saw a little bit of a retest right here within this candle, and then now the company is making moves to the upside. I did make another purchase here that was also on the 15th, where I did purchase a little bit more of X because I am into commodities, as well as the food distribution company BGS. BGS had a little bit of a pullback, which is why I felt really comfortable buying it. It seemed to create a little bit of a base forming right here. This is basically sitting on the 200 moving day, and we could see a breach to back to the upside. And BGS Foods pays 6.3% in terms of dividends, and we've seen the stock basically move up, channel sideways between 26 and 32. We did breach. I believe this breach all the way up here was around during the time period of like what happened with GME. So we saw huge swings to the upside. I probably should have sold, but this is a long-term hold for me. And of course, we could see the stock trade a bit higher. It came all the way up as high as 52s back in 16. But again, we're mostly utilizing this for the income. And as you can see, it pays 47 cents per quarter. So this is one of the other buys as I'm looking for stocks that are making sizable pullbacks. So this was a good pullback from where we did breach. It pulled back roughly about 13%. So I felt more than comfortable enough buying a little bit more of BGS for the dividend. If it starts to trade back and forth into the 26s, I'm okay with that because I can just basically dollar cost average into that particular stock. Had a little bit of a payment from Glaxo. Glaxo, of course, also seeing a bit of a move to the upside. As you can see right here, it breached the 36s right here. As you can see, we basically double bottomed down here at 33 and then channeled right here at around $36. And then now we're seeing a breach to the upside. We were actually as high as 38.26. We saw a lot of sellers step in. As you can see, we're looking at the chart. We have a bit of a resistance over here at what looks like 42, but we actually breached the 200-day moving average, and on 2 separate days, as you can see right here, this is the 200-day, and as you can see on both days, they retested the 200-day moving average, so we could see a move to the upside, and this was on a volume. I believe GlaxoSmithKline had come out with some information about some sort of COVID therapeutic, which is why it more than likely had some sort of a move to the upside. And of course, Glaxo pays at this current price, paying about 5% dividend. I believe when I was in here, let me see where I was in. Let's take a look at some of my positions down here in my dividends. We'll go, so you can see how much I have into Heinz. We're currently at about 27. BGS, we're at 24.50. And where are we? Where's my Glaxo? I think it's up here. Yeah. So we've got 4,100 currently in GlaxoSmithKline. Basically my third holding in this dividend portion of my portfolio. The thing that I did want to talk about was we're seeing a bit of a move to the upside in companies like RIO. I talked about RIO last time. I made a purchase down here in this little, we saw basically retesting those 74s, and then of course we kind of based out at 76, and then now minerals. Most of in my opinion, you're going to see food stocks, things that are going to benefit from inflation, or things that are going to benefit, for example, from supply chain disruptions, are going to be things like commodities, which is why I went into ExxonMobil. I talked about ExxonMobil way back, all the way down here. I believe I'm long at 36. You can take a look at that here. So Exxon, we're currently up. Yeah, we're long. Well, I guess I've averaged up to 39. We're holding 82 shares, and we're currently up almost 1,500 in that particular play. Another one of the companies, so basically most of the companies that I've taken are dividend paying stocks that are usually commodities, like for example, oil, food stocks, minerals, and a steel. So I saw a little bit of a pullback. I actually was looking for a short-term play in companies like steel, and unfortunately I missed this particular out. Steel did have a little bit could have a little bit more move to the upside, especially with the rhetoric of the infrastructure deal. And so I wish I would have grabbed a little bit more down here. I didn't, but on this particular pullback over here, I decided to take a little bit more on the sell side when the stock sold off, and we'll see if we're going to retest 24s or if we're basically going to channel in US Steel. And I've got a little bit of a position also in companies like RIO. These are short-term plays, not really looking to hold any of these positions over the long run. We'll see if we get another breakout to the upside, but this could look like basically a head and shoulders pattern, and so we could see the stock basically test what looks like maybe around 86 or so, and then have a bit of a pullback. On the last day, of course, you saw we had a little bit of a hammer, so there were a lot of buyers that stepped in at the end of the day, pushing the stock back up, but we could make a simple head and shoulders pattern and then see the stock trade to the downside. So this is not necessarily a long-term play for me, but I had bought it down here, was looking typically for these short-term plays. I'm looking for about maybe 15 to 25%, obviously, or more, but If it looks like maybe I got in a little bit late, or if I think that there's not enough potential to move to the upside, then I'll take my 15% and then move those funds over into another dividend paying stock, because I'm not quite sure how long we're going to see the market move to the upside. So I'm basically securing a little bit more profit in case we do have a sharp move to the downside, which is why you see my portfolio, I do have a little bit in the way of a cash balance. You can see currently what I'm up, and I have 2 more buys going in for the coming week, which is going to be in 2 ETFs, one from JP Morgan and the other one is NUSI, which is, they're basically defensive plays. So if we do see a move to the downside, then these 2 companies similarly write covered calls, so it kind of caps a little bit to the upside. They're both high dividend paying. I keep them in my finance sector, as you can see. This one paying, this is Nationwide Risk Management that pays 7.3%, and then JP Morgan currently paying 6.8% currently at the current price. And the reason I'm adding a little bit more to companies like JEPI, as we did see a breakout, so I added more over here at 50 when we breached 56s, and then we see another breach over here at 58.50. Now, of course, these ETFs do trade a little bit on the light side, so it doesn't take too much for it to move to the downside. But this is typically a monthly paying dividend stock, and it does somewhat vary depending upon, of course, the performance, as well as the amount of covered calls that they do utilize. So we're seeing a nice little breach to the upside, so I'm kind of adding more to the play as it's basically moving higher. So moving forward for the week, this is typically what I'm going to be looking at. Most of these companies, like I said, I'm only adding to these 2, and then I've decided that I'm going to be adding an additional $250 a week to each of these plays. So that will probably consume most of what I'm going to put into for the month. I'm going to add probably about 4,000 for the next 3 months to this portfolio, with most of that going into JEPI and NUSI. So I've decided I wanted to put in 250 per week over the next 13 weeks, which is going to, 250 times 13. So that's going to bring me to about 3250, which will give me around roughly about $21 a month in terms of dividends. So from each one, so at the end of the 13 weeks, that'll generate me at least an additional 40 some odd dollars a month in passive income. Now, there is some information here for those who are interested. They are seeing more cases, which of course could lead to more lockdowns. It's an interesting read. I would recommend it. It might help you in deciding where you're going to allocate your funds. So I'll leave the link for this article at the bottom down below. And of course, looking at my dividend tracker, I've made some adjustments as I've sold some of the bigger. I had a decent sized position in companies like Gain, and I did take a little bit of profits. When I was in it, it was paying around 8% or so returns, and on this huge move to the upside, I decided to take roughly 50% profit in both Gain as well as Main. Main, of course, not shooting up as basically kind of like a hockey stick, but it had a big move to the upside, so I decided to take roughly a 50% on capital raise from capital gains. So as you can see that right here, you can see what left over. I still have 3,500 with roughly 2K in gains, and then of course Main. I didn't have as much in Main. I had about 2,000 in it. I had about 6,000 in gain, and so I took some of those profits, basically rolled that back over. That's basically where my portfolio is for the month. In terms of my risk, you can see I'm still holding on to Wells Fargo. I guess we'll leave it off here with Wells Fargo having a huge day. Like I said in many of my videos, that once Wells Fargo breached 40, and of course that was on earnings, and obviously with the government printing money and basically giving it to the banks, obviously bank stocks were going to do quite well. I'm thinking Wells Fargo might bring back some of their previous dividend. They were paying, now they're only paying 10 cents, but previously they were paying 51 cents. We might see bank buybacks. We might see some returning of the dividend, etc. We'll have to wait and see. But as you can see, Wells Fargo having a nice breach to the upside. Like I said, once it broke 40s, That was basically where we were holding below, and now we're up an additional 11%. And so I am holding onto onto Wells Fargo. You can see we got into Wells Fargo here at 26.51, currently trading at 43.44. And people calling for that dividend hike. We'll have to wait and see if that's actually what they do moving forward. And then, like I said, in Kroger, I've got a little bit into steel, and that's basically my quote-unquote risk portion. I am looking to get into some other stuff, but there's a lot of noise in the market, so I'm trying to be very careful in terms of my allocation. And then you can see also in my Roth, as you can see, I also started this Roth with M1, basically just to have like a little bit of a forget it and set it and forget it portfolio. I only put in about half of my 3,000 that I'm allowed, 6,000 that I'm allowed to allocate, with the remainder of that going into my other account, which is with TD, which is where my original account was for my retirement account. I have a little bit of money as well here in my Roth account, which I can show in 1 second. This is my other one. We finally breached 21,000. So this portfolio was down quite a bit. I was in things like Ford and some other companies, and I probably should have left everything in. As you can see, the current account balance is 21,000. We still have about 3,000 opened in terms of gains that I have. Basically took a little bit. I wonder if I can show it. I took quite a bit of profit in a bunch of these stocks. I basically pieced out between like a third or half on some of my positions, because this portfolio was down as low as 12. I want to say 12.7 was the low in this particular account. And so I'm basically managing all of these accounts. And then on top of that, I have my Webull account. I still have my Webull account that I have quite a few option plays and long-term positions. So, and on my options play, we'll see how that one goes. Hit or miss. Show some of those. So as you can see, I still do have TK, and so I'm basically writing some covered calls on many of basically all of my positions. I do have a little bit I have some puts and calls. As you can see right here, I've got some calls for MO. I do think MO will trade to the upside. JP Morgan, I think JP Morgan might see a little bit of a pullback. It's not having that strong move to the upside like you're seeing with like Bank of America and Wells Fargo. Basically, let's take a look at the stock here for JP Morgan. I could be wrong, but that is risk. That is basically how risk goes in the market. Sometimes you gotta give it a try. As you can see, the stock holding below 155s even on the good earnings. So we're kind of seeing a little bit of a top right here, which is why I decided to buy some 140 calls, and those, I mean, 140 puts. I only spent a little bit. I think there were 152, but I'm gonna wait and see how that works out. These expire till the end of June, so we do have quite some time if we're gonna see a little bit of a pullback. I only bought one, and then I bought one MO call here, as MO is peaking out, and I bought I bought a end of May 55 call. So we'll see how that goes. We'll see if it's going to retest. But as you can see, MO looking like it based out down here at 51s and basically peaking through those 52s. We'll have to see how that goes. Then I am holding stocks like, of course, Viacom. I did write some covered calls on that. I bought a put to hedge onto the downside. I will see. I'll hold on to this, as well as, of course, holding long Palantir with a covered call, as well as, of course, Kraft. I do have Kraft still in my portfolio, again with a 41 covered call, because we're going to see if the stock trades sideways or not. And then TNK, I still believe in shipping prices. We did see, it looks like someone came in with a big pullback. This video is getting long. So looks like someone dumped a bunch of stock, and so I started buying more down here. I had 150, sold 50 on the retest. I was buying down here at like 1170s, and then I sold most of those at around, I sold the 50 extra that I bought at around 1250. And then when the stock breached higher, I sold a call. I sold a call, I think a 1250 call on this pay for, let me see, what is it for 85 cents. Was that right? Let me see. No, excuse me, for 90 cents. So this is basically kind of hedging to the downside while still being able to kind of maintain some of the profits to the upside. This is basically what I'm utilizing with my small account. This is basically like my swing trading account. We'll see how well that goes, but that's basically going to be it, which is what I'm looking for. So those are the stocks that I'll basically be looking at for the duration of the week. Feel free, of course, if you have any questions or if you have any suggestions of what maybe good stocks that I might be missing out from my portfolio, feel free, of course, to leave it down below in the comment section. And that's basically going to be it. The goal for the rest, obviously the goal is to get this account to at least 100K with 500 in terms of dividends. And then maybe we'll start doing some videos once I fly out to Colombia and basically do some purchases, because I'm going to buy some apartments out there in Colombia, as my goal, of course, is to live abroad more than likely at some point in this year. I do perceive that there's going to be some changes moving forward, especially in terms of your freedoms. If you haven't seen, pay attention to things that are going on in places like Canada, where they basically have formed a police state. In places like Ontario, pay attention to what's going on in places like Israel, moving forward with a lot of these further lockdowns. So basically I'm gonna leave it there. This video is getting a little bit long. Hope you guys have a great rest of the weekend. I'm gotta get ready for work. I'm gonna be at the hospital tonight, and then we'll do some trading for the rest of the week. Appreciate you guys watching. I'll catch you next time. Thanks for watching. Of course, feel free to like, comment, and subscribe, and I'll check you next time.